Right. So, welcome to QuickBooks. Let me know. Can you see? Did something pop up?
It did a second ago. Yeah, I've got the QuickBooks Premier 2018 Chapter 1 Introduction.
Perfect. Good. So, Chapter 1 Introduction to QuickBooks. So, here, the book is supposed to teach you Premiere 2018. But of course, with the new changes and stuff going on, it's actually now Accountant 2018. They just recently made this change because last year in June, my students were successful to download the actual Premiere 2018, but I have no idea why they changed it. But with Accountant, you can do a lot of other stuff. So we're teaching you primarily to conduct QuickBooks as if you're using Premiere 2018. So again, here's the book that we just picked up. So again, it is called The Fundamentals of QuickBooks. So what this is essentially, it's basically to teach you exactly what's going to be on the certification exam. It teaches you how to the ins and outs of how to operate QuickBooks itself and get the basic knowledge that you need to have in order to either run a small business or to even also depending which program you have, just to operate daily transactions. So in this class, we're going to be actually focusing on a case study called Academy Photography. So when we go through the examples in the book, we're going to be primarily geared towards revolving our ideas. So all of our sales and all of our equipment that we need to purchase is all going to be in terms of looking at Academy Photography as our company. Okay?
Mm-hmm.
So first things first is obviously going to be talking about the product lines. So again, we talked about that in your book. It tells you that there are 5 different product lines. Now, because you were being tested as of the 2018 version, these 5 exist, okay? You have the online version, the Pro, Premier, and Enterprise, and you also have the Accountant version, all right? If you go to QuickBooks.com, you're going to see that there's a lot more other programs that exist, such as Self-Employed. You even have other things like QuickBooks Live. I'm not quite sure what that is, and of course you have different online advanced. Okay, so we'll talk about each one and what the differences are. So in your book, it says that a little. Did you know? QuickBooks actually, the ones that are more for industry specific details and reports are going to definitely be your Premier and your Enterprise. So again, this book is supposed to be revolved around Premier, but again, you guys are given Accountant, which can do everything that Premier and Enterprise can do. The only difference is the formatting looks just slightly different. You're gonna have a little more options, and yes, and I'm going to go ahead and go over the details of every single one. Okay. So the first one that we need to specify is the difference between a desktop version and an online version. So again, desktop is pretty straightforward, right? We understand that desktop, right? It's on a local hard drive or it's on at a computer that's either at home or it is at an office, okay? Where we understand how online works is you're going to have applications that allow you to store your information using the internet. So having the Intuit Cloud, right? You're going to be using online resources, using your smartphones, all that applications and stuff in order to be able to conduct your transaction, and it's all going to be stored online. So it allows you to have more freedom to be able to roam around and have transactions on to go. So especially when where you're traveling, online would be like pretty much ideal for that kind of thing, because you don't want to lug around a local hard drive, or in this case maybe you don't need to lug around your laptop. If any case you have your phone, you can access the online version at any given time. So with that being said, let's go ahead and talk about what the difference in subscriptions they have available for online. So of course, when you are dealing with online, you're pretty much buying the space available in the cloud, right? So every package is going to be a monthly subscription, okay? I didn't show any of the price values on here because they do change over time. But usually each section is based on a criteria or what seems to be best for your company. So if you are a small self-employed little company, right, you're just a mere 1099 worker, you basically do something your job title is very, very small, and your business only entails a few items or whatever it is. Then self-employed, right? You're not going to have that many transactions. The most you'll have is probably sales and, costing the goods sold, right? Every time you use your product, you need to find a way to measure how to cost it. So other transactions are going to be more small and minimal. Whereas as you progress in each single item that we have here, not only are you building the amount of space, you're allowing more transactions to be available to you. So obviously, the online advanced version would be definitely for more corporate ideas where they're dealing with a million transactions per day. And if it's easy to do it online, then you're more likely to want to have to pay for a higher service and more space available to have on the cloud for you to be able to conduct your transactions. So again, these are just, again, if it makes more sense to do things on the go, or if you're traveling, online would be definitely a better one for you to go through. Okay.
Okay.
But of course, it's most actually preferable to actually have the desktop version, because again, the desktop version is going to allow you to have access to almost any transaction. And again, although it's not very portable, you can put a desktop version on a laptop, so I guess it can be, in a sense, it's portable. The only thing is that this program, again, it's very heavy. And the more you add to a file, the bigger and heavier the QuickBooks file gets, and you can expect, possible the program crashing. So essentially, when you get the desktop version is going to be impactful with every single transaction that you can think possibly. But of course, it really depends on what kind of business you are. So again, at this time, when I researched this was for the 2020 version, but it still exists today, right? You still have the Pro, Premier, and you have your Enterprise. Okay, so those are the three basic desktop versions that you have. Okay, and then here I'm gonna break it down for you even further. Right? So what is Pro, what is Premier, and what is Enterprise? Again, it's really based off of how your company is established. Are you a small company? Are you a corporation? Are you an LLC? If you are one of those categories, then you can expect that you fit in one of these transactions, okay? So if you're a small business, or you're like a local restaurant, you can only expect your transactions are very minimal. You're not gonna have that many customers, or you may you may not have that many people that are your suppliers. So, with that being said, because you're such a small company, Pro would be definitely best for you, because not only does Pro allow you to, still do the transactions you need to get by. It's meant for smaller companies that only do a few transactions every once in a while. And here we have what's called names. So, or items in this case. So, what names slash items are is basically 14,500 of those names slash items can hold up. So, each program or each file can hold up to as many as 14,500 names. So, if one customer, right, is named Sam, that's one name right there. A vendor that you have is going to be another name. So, think about it. Having to be able to hold 14,500 names in total, you can only imagine. That's a lot of people as is. Okay. And then, of course, because Pro is meant for smaller businesses, most likely you're only going to have you're going to have limited access, right? Because the company's so small, you're most likely to not have that many employees. So you don't need that many users to be able to access a file at one time. So the minimum is about maximum is about 3. So you can have anywhere from 1 to 3 users that can access the file at a single time, so simultaneously. Okay, and we'll talk about multi-users in a few for this chapter. Okay, so then Premiere. Yes, go ahead.
No, I was just agreeing.
Okay. All right, so a Premiere. Premiere is meant for like small businesses that need more than 14,500 names, but they're also for medium-sized companies. Or typical ones would be like LLCs, right? They're established as some kind of business where, they're well known, but they haven't reached that corporate status yet. Okay, so for smaller or medium-sized companies, they need to be able to hold at least 1 million items or names. So, meaning they have at least 1 million customers, or they have at least 1 million vendors, right? So they're bigger, a bigger company, and of course, bigger companies, they tend to have more employees or more staff members that have access to the QuickBooks. So in this case, you can have up to 3 to 5 users having access to this QuickBooks at the same time. All right. And of course, with this one, there's additional pluses for this is that if you have Premiere, you have up to 150 plus industry specific reports. Now, when we talk about an industry, which we'll talk about more in depth tomorrow, right? So, understanding what an industry you belong into, so such as things like Target, Walmart, they are a supplier industry, right? They are a it's they're like they function as both they sell products, they sell food, they universal. They supply a lot of more than just a specific product, right? So they're going to belong in a retail slash industry. Or another thing is like, for example, right? Coffee. You got Starbucks, you got Dietrich's Coffee, you got Dunkin's Donuts, right? You have all of these coffee shops that exist, right? And what industry they belong into? They belong into either the food or restaurant industry, because they serve beverages, right? So every single company belongs in a specific industry. And once you understand what these reports reflect, is that because industry specific, right? There are certain factors that a report will have details in regards to the industry. So, for example, if I have a retail or a restaurant type industry, I'm going to be expected that I have food, I have sales, I have these type of things that are particular into my industry. But if I'm a manufacturing that I make car tires, I'm not going to sell food. So that's what I mean by industry specific reports, is that it makes it specific to the industry that you belong into. So that's what's really cool about this section here. They also have forecasting. So again, you can make predictions in the future. You can make profit predictions. You can even predict the market of what happens when we produce a product and we release it. You could do predictions and forecasting there. And on top of that, because we are in a new digital age, they even made it convenient for mobile tracking. So, for example, when let's say you do go out in public and you bought something, you can use your phone and take a picture of the receipt, and you can actually save it or send it to your actual desktop thing and make it available. So that's really cool about Premiere. And then, of course, lastly is going to be enterprise, which is meant for bigger companies that are, such as corporations. All right. They can hold definitely more than 1 million items per list. So that means hundreds of million customers, 10 million vendors, right? They can hold a lot of people, okay? And they can have definitely with corporate status, right? Your staff can be over 100 people. So they can have up to 30 users have access to one QuickBooks file at one time. So with that being said, again, for corporations, right, you have HR, you have sales, you have your profit, you have your inventory, you have your marketing management. Okay, so you have all of those positions, all right, and all of those people can access the file at one time. So that's what's really cool. They also have in over 150 industry reports, as well as forecasting and the capability to do mobile tracking. So of course, every single program is going to be based on what kind of business that you're establishing. You can also use this for personal. Again, you don't have to have a company per se. You can use it for your home personal transactions, whether you want to keep track of your your daily spendings. You may do so as well. It's not just only limited to your own a business per se. It can be utilized for personal transactions as well. So most likely, if you are going to be doing your own filing or your own transaction to keep track of your expenses, most likely you're going to go for something smaller like Pro. Okay. All right, so a few things I did not mention here is because Accountant is actually not one of the programs that are super widely universal or available to the common public, because you know what, the Accountant is actually for the IRS. It's definitely for people who do accounting for other people. Because when we doing QuickBooks, you're going to learn that QuickBooks allows it to make it a lot more easier to keep records of your transactions. But it also, with intent, allows you to make it easier to file your taxes. So that's the primary goal of what QuickBooks is made for. Because if you've ever looked at Intuit itself, they also produce TurboTax. So to make it easier for businesses to file their taxes, they just link up and send it to the Accountant version of QuickBooks. And the Accountant versions of QuickBooks pretty much does everything that Pro, Premier, and Enterprise all in one go. It's flexible, so instead of having the accountant being able to have all three available, they created a universal accountant version. So then they're able to access Pro, Premier, and Enterprise and be able to do all of those things in order to help the business file taxes a lot easier and a lot quicker. So that's just what accountant does. It's just, in a sense, it's a combination of all three of them. Okay. So one thing I want to also show you is that according to the QuickBooks, you are going to be learning this very, very important function key. It's function key F2. And what this does is it allows you to pop up information in regards to your product, license, and when you've downloaded. It also allows you to see what releases are. So every time we open up a program for QuickBooks, right? Most cases, any kind of software program, right? You will always have to update it for some reason because oftentimes, and avid users of QuickBooks, they try to make a transaction happen, and what happens is that the program has bugs or it just doesn't work. So what happens is that Intuit, they create patches and they make it a downloadable and available to the public, and that's what's called a release. A release is just the number of patches that are incorporated with the actual program that you're currently using. So in this case, if I actually look at my my little F2 here, it gives me my product detail. For example, it gives me my product license number. Okay, as you can see, it says that my product license number is the 16-digit code right there. Okay, it even gives me my product number, or license number, and then product number. It also tells me how many users have this license. It's only me. I only have this. I'm only licensed to use this one. Other things too is it's gonna tell me what was the day I installed this. So I've installed this since September of 2019. So again, it's going on a year and a half now. I've had this program since 2019. All right. And then here is where you're going to be looking at your release number. So as you can see, R1-22. I've never updated my QuickBooks till this day. So since 2019, I'm still on the first release version of the QuickBooks. I've never updated it at all. And this 22 is basically saying what is available. So I only have one out of 22 that are available. Okay. And out of this, it's just because that means all the content that I've taught over the course of a year and a half of QuickBooks, I've never had to come into I've never come into conflict or had a bug for a specific transaction. So again, releases are meant for more people who are, they want to update the QuickBooks to make sure that they get the latest updates, but for any fixtures that they need to fix or any bugs that they need to patch up. So again, it's more for advanced users. So as you can see, I've been doing fine with just not updating my QuickBooks, okay? Now, that's not going to cause a problem at all unless I said you are an avid user of QuickBooks. Or let's say you are exploring and you notice that there's something wrong. Now, if you are downloading the Accountant 2018 because you're downloading it from Intuit itself, it's going to be the latest one. Okay, so it's going to be updated to the date that you download it. So in this case, if you download it tomorrow, it's going to be up to date with the newest release as of today. For me, I've downloaded this since September and I've never updated it since. Okay. Other things too here is that you're going to notice that when you're on a current file, it's going to give you a list of all the names that are included on this file. As you can see, I have a blank a blank file. So I opened up a file that didn't have any content in it. So that's why it's shown as blank. Blank this, blank that. Okay. But when we go into actually looking at the program itself, I'll show you what those details entail. Okay. So again, in order to be able to see this, you just need to know the F key function button. All right. And it's the numbers. It's the F numbers keys that are above your number keys at the top of your keyboard. All right. So other than that, yep. So the little things that you can know too is that the great thing about QuickBooks is that when you are going into upgrading, of course, every year QuickBooks comes out with a new program. Now, needless to say, not every business needs to upgrade to the latest and greatest. For most businesses, it costs too much to have to upgrade every year, especially when there's only like a minor difference when it comes to each QuickBooks that you download. So the difference between 2018, 2019, and 2020, there's not that much of a difference. But when I show you in this particular section, there's only like minor differences, and I'll let you know what they are. But for this case, what's great about QuickBooks is that it allows you to go ahead and retroactivate any portable files that were created for a previous section. So it can go back up to 3 editions earlier. So for example, I'm right now currently in 2019. I can go back as far as, let me see. I can go back to QuickBooks 2016. Okay, that's the latest I can go back as far as that. Now this says 2017, but I miscalculated. It's 3 versions prior without counting the current one. So yes, and obviously the current one can open its own QuickBooks file. Now, for that, and with that kind of case, it makes it flexible for a lot of businesses because instead of having to pay for the program and have to update it every year, they can go as far as 3 years out. Okay, so if they have the 2015, they need to upgrade to either 2018 or 2019. And so on and so forth. So instead of having to do it every single year, it saves businesses a lot of money by allowing the files to be transferable 3 years back. Okay, just a little FYI right there. Okay, so again, we talked about what QuickBooks is used for and what accounting is involved in QuickBooks. So as a reminder, you absolutely do not need an accounting background in order to do QuickBooks. And vice versa. You do not need to know, I was right. You do not need to have an accounting background in order to use QuickBooks. Because again, most cases when you are in the position, they don't care. As long as you can enter in a form, that's all they care about. If you can do a simple task. And I'll show you how simple it is as we go through the lesson, right? Entering data in a form and pressing enter. That's all you need to know. But if you do have an accounting background, again, it only allows you to be able to manipulate QuickBooks the way that you want it. Because you know how debits and credits work, and therefore you are more powerful because, again, you can manipulate the transaction in a way that you want to organize it. But for someone who doesn't have an accounting background, they are only based, they only know what they're told to do. Okay? So that's the advantage and disadvantage of having an accounting background. But of course, you absolutely don't need an accounting background in order to use QuickBooks. So that's why you're perfect for this class. All right? So the main goal of accounting is to understand the nature of a business, right? The flow of a business transactions. So when we talk about accounting, right, we're thinking about transactions that affect a company. So for example, a sales. How does a sales transaction affect a company? It allows you to make a profit, but it also allows you to sell a product, right? It allows you to get rid of the inventory. So in this case, it does affect my business because not only am I raising my profits, but I'm also making sure that my costs stay low. So that's the purpose and the main focus of accounting, right? Now, when cash flow is flowing in, right, we have to understand that there needs to be an equal and opposite cash flow out. So this is applied science, we can call this, right? If there's an action, there's always going to be an equal and opposite reaction. Same thing here, because we follow the concept of debits equals credits. So same idea applies here. If there's a debit, you need to have an equal and opposite credit. Now, of course, you can split the credit in as many ways as long as your debits equal your credits. That's the main bottom line right there. Okay? So again, understanding how money flowing in. So again, whether you're making money, whether you made a sale, you have inflow of money, and then you also have to apply the equal and opposite is that you need to spend the money in order to make the money. You need to pay for the business expenses. You need to pay for rent in order to have a shop for you to sell your products to the public. So there's a lot of ideas where you need to kind of understand how these transactions affect a business. And that's the ultimate goal of accounting. Pretty straightforward. Okay. So here is where I'm going to talk about the very things that you need to know. So again, when we're talking about accounting, there are 5 and only 5 types of accounts. You have your assets, right? Your assets is anything that you own, whether it's property, plant, equipment, cash. You own cash, right? It's your money. You own patents, you own licenses. Whatever constitutes as your ownership is going to be considered an asset. Liabilities are anything that you owe, whether you owe other people on an account, whether you wrote a note to them and say, I promise to pay you back, an IOU. It's also where business loans or any loans, student loans, if you're looking at a, educational business, right? Any type of loan or anything that you don't own but you have to pay back, an obligation that you have to pay back is going to be a liability. Equity. Equity is going to be the value of your company. Now, a lot of people refer equity as your net worth. Yes. In context, yes, it is going to reflect your net worth. So what is the value of your company? That's your equity. All right. Now, don't confuse equity with property management equity. It's not what's how much you gain. It's just what the house is just worth as of now. Okay. So make sure you don't confuse that because property management and accounting are 2 separate things, but they use concepts that are very similar. All right. And then, of course, we have income/revenues. How do we generate extra money? Or how do we what is our main core of operations for us to generate income? And in this case, we primarily are looking at sales, right? Most cases, right, you either sell a product or you sell a service. Manufacturing companies, you still sell a product, right? So essentially, your source of income is going to be revolving anything that is directly correlated to your company. Now, other things that you can also generate income to is if you're a corporation, is you can sell your stocks. Okay, and if you do sell your stocks, then yes, that's generating revenues. And last thing is going to be your expenses. Anything that you need to either spend, use, or you need to not acquire, but anything that constitutes to in order to operate your business, right? You need to pay rent. That's a perfect expense. You need to pay for license every month. That's an expense. Okay. If you use your office supplies, that's an expense. It's a non-cash expense, and as we go through this, it will make more sense. But again, it's an expense. It's something that allows your core business to operate. It's your expenses. So again, those are the only 5 that you will have. No more, no less. Okay? Now, we're going to talk about the accounting equation. The accounting equation is going to be the fundamental core, the backbone of all accounting, because this equation must hold true at any given time. So it's going to be your assets plus assets are going to equal your liabilities plus your equity. So everything that you own is going to be equal to your total liabilities that you owe plus the net worth of your company. All right. Now, don't understand it as it's supposed to be. Isn't net worth supposed to be equal to your assets minus your liabilities? In this case, yes, that works too. Okay, if that's how you want to look at it. Equity does equal assets minus liabilities. But in this case, the way it's formatted is you want to know that everything that you own should equal your company value plus everything that you owe to whoever. Okay, and that must hold true at all times. Okay. And that equation is going to hold true when we dive into doing our reports, because when we do one of our reports, it's going to reflect that equation. All right. So the next thing that we're going to talk about is going to be the chart of accounts. The chart of the accounts is going to be the most important thing that you need to establish at the first thing before even recording a transaction. You need to know where you're going to label them or place them in, whether it's, to determine where your flow of transactions going. Is it going to affect the things that you own? Is it going to affect the things that you owe? So this is where the whole debits and credits are going to equal each other. And how the chart of accounts, again, is going to be a list of every single item or an account that reflects every transaction that you can think possibly. Now, of course, the chart of accounts is going to be built based on what accounts that you constitute as something that you need to use for your business. So, for example, here, you absolutely need a bank account or a checking account, because that's where most of your money is going to go into. So that's the first thing that you should always have is some kind of bank account. Okay, because one thing that you can understand is that you can use checking to either deposit your money or you can write checks to pay off the bills that you owe. So that's going to be one of the accounts that I need to have that's going to affect my business in multiple ways. All right, and how the chart of accounts, again, so once you've created the list of every single transaction you can think of, then you got to figure out what kind of order it's going to be in. Now, here's a little trick, a little factor here. You do not have to use account numbers unless you need it. So if you don't use account numbers, right, and you just have the accounts the way they are, you need to organize your accounts according by the account type. So your assets are always going to be first, your liabilities are going to be second, third is your equity, income slash revenues are going to be fourth, and then lastly, all of your expenses are going to come last, right? Now, no matter where you are, whether you have account numbers or not, what's going to happen is also you're going to create accounts along the way. You can't assume, or you can't say that you can be able to pinpoint all the accounts all in one go, because again, we understand that there's expenses or income that occurs randomly. You'll have a random expense that normally doesn't happen all the time. So you're going to have to create a new account every single time in order to reflect that business transaction. And if you have a sequence number in your account number, you can expect that that account can be placed somewhere else, because if you don't organize it by account number, right? So again, it's based off of the type, right? All right. And then now we're going to go ahead and talk about why debits and credits is a thing. So this example here is we're going to be taking a look at what's called a double entry system. Okay, so how this works is we're taking our total debits, right? That's one transaction, right? You're recording it in one direction. Double entry means you need to have your equal and opposite reaction and reflect where these values are going to be placed at. So in this case, I have sales and sales tax payable. Okay, so again, we understand that it's broken down to this, but at the end of the day, right, sales is what we earned. Sales tax is what we owe, because sales tax is not what we mandated. It's not what we don't charge sales tax. The government does. So in another sense, when we look at this transaction, we owe the government money. That's not our money. However, your customer is not going to give you a portion of the money for your sales and a portion of the money to the sales tax. They're just going to give you in one lump sum. So that's exactly how this transaction works. It's saying that because you did a transaction, you sold a product, you charged your sales tax, ultimately your equal and opposite reaction is going to be your total cash. All right? And then when we look at this, we can see that our debits equal our total credits. All right? Now, if I just recorded just my cash, that's called a single entry transaction. Okay? If you only record just the cash, that's only a single entry. In order to make it double, you have your debit and you have your credit. Okay? That's what makes it double.
That's why
yeah.
receipts are done like that at restaurants and things like that, because it shows the entire thing.
Absolutely. Absolutely. Correct. Good. All right. And then also when we talk about the normal balance, which is the next slide, okay? Never, ever, ever refer to debits and credits as positive, negative, increase, or decrease, because you have to understand the flow of transaction in order to really recognize why something is being debited and why something is being credited. So in this case, you're never going to refer to your debit as an increasing number. No, because in a specific account, you can also decrease an account with a debit. And how that does is utilizing this little normal balance worksheet right here. This is called the accounting model. Now I'm going to give you an example, okay? If I made a sale, right? I know that I'm increasing my assets because cash is an asset, right? It's money I own. I can increase that with a debit, all right? But I can also decrease my cash with a credit because I can go ahead and pay a liability. All right? Now, same thing in flip and reverse perspective. If I were to make a sale, right? Let's say the customer decides to return the product. I would have to decrease my sales, right? I can decrease my sales with a debit,
Okay.
and I would decrease my cash because I have to give their money back. So in this kind of sense, it's not whether you can refer your debits as credit as increase or decrease. It really has to it really constitutes down to what the transaction is at hand. Are you increasing your cash or are you decreasing your cash? Did you increase your sales or did you decrease your sales? Did you increase a liability or did you decrease a liability? So again, every transaction is going to matter. And how you determine what account gets debited and what accounts get credited is going to be how you understand the flow of transaction. So again, I gave you a couple examples. If I'm paying something I owe, I'm decreasing my liability and I'm decreasing the cash that I have. Okay, so therefore I got a debit and I got a credit. Okay, now this only makes more sense if you go through the whole accounting program. But again, as long as you understand at least that kind of simple transaction, then you should be okay. All right. So, other than that, we also need to take a look at the difference between a cash basis and an accrual basis. All right. So, cash basis is pretty straightforward. You only record a transaction, okay, whether it's a revenue, when cash is received. Straightforward. Cash basis, cash needs to be there. And in order to record an expense, cash needs to be readily available to spend. Right? If you don't have cash, how can you record that an expense has happened if you didn't pay anything? Right? So that's where the assumption here is where the accrual basis comes into play. The accrual basis says that you're going to record a revenue as soon as the product has been sold or the service has been completed, regardless whether cash has been received or not. So in this case, we call that earned. Okay? When a product has been sold, you earned it. When a service has been complete, you earned it. So the day that it's been completed or the day that it's been sold, you're going to record it that day, regardless whether cash has been received or not. Same thing applies to expenses. The minute you receive a bill or the job has been completed, that is when you're going to record the expense. Okay, so in this case, we call it incurred, right? Incurred meaning it happened right then and there. The service was completed, happened right then and there. Regardless whether you received cash or not. And of course, the perfect example here is if you've heard these before. You have an accounts receivable and an accounts payable. When someone owes you money, that's an accounts receivable. When you owe someone else money, accounts payable. You didn't pay them yet. All right? And the idea is that you're calculating money as if it had happened without receiving it. And that's the difference between cash and accrual basis. And I'm going to tell you right now, QuickBooks will automatically be defaulted by using the accrual basis. Okay? And again, most companies, especially especially corporations, they are all about the accrual basis. Okay? Small businesses such as mom and pop shops can't afford to do that. They need to, instead of owing more money, they need to pay it right then and there when they have the money to pay for it. So that's where the fine line and difference between the two is that mom and pop shops, right? They can only record revenues when they receive cash, right? So some places are cash only or credit card only. Same thing here. When they have the cash readily to spend, that's when they can buy their products or make those expenses. Whereas corporations, they have that idea where they can owe people a whole bunch of money and people can owe them money. They have that credit line that allows them to be more flexible. But in reality, if they allow everyone to owe them money, when we do actual reports such as the profit and loss report, when we're looking at an accrual basis, this company is going to look so good because they had all of these actual sales. They had all this income. Now, if you switch it to an actual cash basis, how much of those actually were received? How much of this were actually paid in cash? And then you're going to see that, wow, this company is actually not doing so good because half of the sales that they had, they never got paid for it. So they're owing more money essentially because if the customers are not paying for their items that they purchase, they still need to incur their expenses. They still need to pay for the facility. They still need to pay for the employees that work there. So you can only imagine that looking at an accrual basis versus a cash basis, it tells you a lot of details in regards to the profit and loss. So again, it actually works a lot better if QuickBooks is primarily geared towards an accrual basis type of business. And I'll talk about that when we dive more into understanding why, okay? Especially when it comes into functionality of utilizing the actual QuickBooks itself, okay? It's better to use accrual basis because if you are going to be just only using cash, you're only limited to 3 transactions on the QuickBooks. You're going to record your sales receipt and your deposits and your checking. That's it. You're not...
That's kind of like what a lot of small businesses do. I mean, really small businesses do, isn't it? Because then they just have to sit there and figure out whatever taxes that they...
Absolutely. And they get a lot of tax breaks too because they are cash basis only. So like I know some of them, they can get away with not paying sales tax because they are cash basis. So I know that if you ever gone to a mom and pop shop, sometimes they'll say, "Hey, don't worry about it. Just pay for the product. Sales tax is exempt," because they have that write-off where they're able to do that. Okay, so yes, good job. All right, last but not least, accounting in QuickBooks. So again, I talked about a lot of details in regards to the accounting behind the scenes, right? Or what accounting is, right? It's dealing with the debits and credits. Now, what QuickBooks does is it does all of that behind the scenes. So again, when we're looking at QuickBooks, you are essentially doing a single entry transaction. Okay? So for example, right, I'm going to be entering that I made a sale. I'm only recording the cash I received. But what QuickBooks does behind the scenes is it records the cash, it records the sales tax that's involved, it also records the inventory. Like it gets rid of the inventory because you don't have that item anymore. So it does a lot of its work behind the scenes and you don't get to see it. And that's exactly why you don't need to be, you don't have to have an accounting background to understand where these transactions are going, because QuickBooks does it for you automatically. Now, what the accountant comes into play is, let's say you entered in a bill and you entered it for the wrong amount. How in the world are you going to fix it? Obviously, it's a program. You can always undo it. But in a sense where it's in the past and you can't correct it, the accountant's going to come into play and they're going to make an adjustment and fix that error for you, because they understand, okay, I accidentally placed this in that account when it needs to be in another account. So they know where to do and how to do it and how to fix it, because they understand how debits and credits work. So that is where the accountant comes into play. But again, a lot of this, using the QuickBooks itself, you're entering things as a single entry versus a double entry. You don't need to have your debits and credits match. In this case, you're just focusing on one flow of transaction. QuickBooks does everything for you in the background. Right? All right. All right, any questions?
I don't think I have any at the moment.
Good. All right, so let's go ahead and move on. QuickBooks files. So there are a total of 3 files. Now, I'm gonna try to break this down to you as simply as I can. QuickBooks essentially has actually only one file. Okay? However, it can be saved as 3 different files. Okay? Now, first off, when you create your company file, the first thing that you're going to be doing is you're going to be looking at a data file. Now, what a data file is pretty much your the workbook that you're currently working on as of today. Like, if you're entering in transactions, you're going to record it in your working data file. Now, when you save your work, okay, now here's a little note here too. You can save it as all 3 files, all right? When you save your data file as a data file, right, essentially, you don't need to save it because it will automatically do it for you. So that's a great thing about QuickBooks is you never have to press that control save, control save, control save. It will automatically save it for you regardless, because it's relying on the internet to save the work for you. Okay?
Okay.
So that's why you need internet at all times. If you don't have internet, you can't do anything in QuickBooks. You can't even enter in a transaction. You can't, and a few things too, you can't even look at some of the things that are in QuickBooks as well. So that is the working data file. That's the one that you can always update at any given time. Enter any transactions at any given time. Okay? Now, of course, the more details that you add to your working data file, the more heavier and bigger it gets. So what happens is, let's say you need to send the file to a coworker or your accountant. That's where you can go ahead and create either a backup file or you can create a portable file. So portable file, again, is pretty straightforward. You're going to shrink and compress that file, the working data file, into a more feasible and easier, smaller file that can be sent over the internet. So primarily, again, so when we download from the internet, we're downloading a small file. It's like maybe a couple megabytes. That's going to be your portable file. Now, the one thing that you can't do is when you save it as a portable file, it's only going to save the last transaction that you had on that working data file. Okay? So once you open up that portable file, what you're going to do is essentially you're going to unravel it and create a new working data file. Okay? A little confusing there. So the only purpose that a portable file does is it just makes it easier to send the working data file to other people.
So does it overwrite the working data file at that point?
No, because you have to save it as a file. You have to save it as another working data file.
Okay.
Okay, so, but here's the thing. If you end up updating that working data file from the portable one, in order to send it back to your person, you have to recreate a new portable file to save all the changes that you've made to that file. Okay, so once you create a portable file, it stays that way for the rest of its life. It never changes because it only saves the last thing that you've placed in that data file. So when we talk about the student portable files that we just downloaded, you will never ever need to recreate, re-download for any reason, because no matter what given point in time, you can always access that portable file at any given time. However, every time you open a portable file, you're essentially recreating a brand new data file. Okay? Same thing goes with the backup file. Oftentimes, when you are working on a data file, it is always important that you save a backup copy, because anything can happen to your computer. You can have a local a local internet outage. Therefore, you're going to lose all your work. So, and then sometimes what happens is that maybe you have too many users at the same time, and someone tries to enter in a transaction and they corrupt everybody's working data file at that one time. So what happens when a backup data does is it basically saves the file so you can go back to it and open it again. Okay, so essentially the entire time that we're going to be utilizing QuickBooks, even the one that we're currently using, it will always be the data file. That's the one that you're always going to be working on. That's why it's called a working data file. You're always going to be constantly updating it. Now again, QuickBooks will automatically save it. So you do not need, it will automatically save the current working data file. So you can always go back to that every single time. Now, if you're sending it to somebody, portable file. If you're going to create a company backup file, just in case something happens, right? Your computer crashes one day. There's too many things going on. Your program crashes. That's why you would have a backup file. But at the end of the day, when you open up or restore those files, you're essentially creating a new data file. So at the end of the day, there's really only one. Okay? And we'll take a look at this. It will make more sense when we actually dive into the actual lecture, because we will take a look at what happens when we talk about the difference between them. Okay? Now, usually when you have QuickBooks, the first thing you're going to get is this little box here. It's basically going to give you 3 options. Well, in this case, we'll only use 2. So it's either you create a new company file. So when you're creating a new company file, you're essentially creating a working data file. If you are opening or restoring, whether it's a working data file, portable file, or a backup file, then that's where you're going to take that option. You're going to pick that one. So in this case, chapter 12, we're going to take a look at creating a company file. And then when we dive into the second half of chapter 12, we're going to take a look at opening a portable file. So you're going to see, you'll understand once we actually get into it. So again, opening a company file, like I said, if you choose to open or restore one, it will give you 3 options to choose. Are you going to open a current working data file? Are you going to open a backup file? Or are you going to open up a portable file? Okay, those are the 3 options, and you only have 3. So once you select the one that you want, okay, if we restore a backup file, the next thing it's going to ask you to save it, okay, as a current working data file. And I'll show you an example again when we go into the chapter 12 tomorrow. Okay? But in order to access or to be able to create your company backup, pretty straightforward. You go to File, just like any other program, right? You go to File, you go to Save, right? In this case, it's straightforward. It goes File, Backup Company, all right? And it will give you options. Do you want a local backup or do you want a different backup? In this case, a local backup just means that do you want to save it on your desktop, your local. So if you know any IT terms, the local disk is going to be your computer hard drive. It's going to be local. That's what it means. Okay. Same thing with opening a portable file. Except this time it's going to be file, and you're going to either send a copy, and it's either you're going to have two options, either an accountant's copy or you're going to create a company portable file. Pretty straightforward. All right. That's how you create a portable file. Okay, but you have to have an existing data file in order to create a backup and or if in order to create a portable file. So you have to have an existing data file in order to do those. Okay, and we'll take a look at that again tomorrow. So how are we going to do user interface? User interface, pretty straightforward. When you open up QuickBooks, this is how it looks. All right, so pretty straightforward. It's going to look just like this, right? You have your generic home page, which I'll talk about in a second. You have your list on the left column here, and then you have the items up at the top on the gray bar, okay? So I'm going to break it down to you. Home page. Home page is the graphical organization of how the flow of a transaction works. So again, look at the very top up here under the vendors, right? If you're going to make a purchase order, you're obviously going to receive inventory. And once you receive inventory, you're going to enter it against the bill. And then let's follow that line down. Once you have entered in a bill, you need to pay the bill. Straightforward. This is going to be your best friend if you are very new to QuickBooks because it gives you pretty much what you need to do. If you entered in an invoice, follow the gray line. Once you follow an invoice, you're gonna have to pay. You're gonna have to receive a payment. Once you receive the payment, it's gonna go to your record deposits. So again, home page is going to be your best friend for those who to help better understand what is the next step after you've entered in a transaction. And that's it right there. Okay.
That's pretty cool. That's
Go ahead.
Stuff like that for working. If we were doing a certain procedure,
Mm-hmm.
and that's all this really is it tells you exactly what to do.
And this is exactly why you don't need an accounting background. It shows you what to literally do next. Okay. All right. Now the next one is going to be that left list on the left side. That's going to be called your icon bar. Now what essentially it does is it's actually a shortcut to go to your certain centers or certain places that you need to go to. It also allows you to have things such as your bank account there, your bank feeds, your a calculator if you need one, a calendar. It's basically a shortcut link. So it's pretty much on Windows, right? When you have icons, right? It's just a shortcut to open the application. Same thing applies here. All right. But we call this is the icon bar. This is going to be one of the ways that you enter in a transaction because it allows you to get to the place that you need to go to. Now, it doesn't take you directly there, but it takes you to the initial area where it belongs in. So that's why I'm talking about centers. And when we talk about centers, which is going to be a couple slides later, you'll understand what a center is. So usually that's what the icon bar does. Okay? It gives you a list of shortcuts to get to a transaction. Okay? And then lastly is going to be the last interface, which is going to be your menu bar. So at the top of your screen, you have that blue bar. That's your title bar. That lets you know what data working file you are currently in. So in this case, I have my Academy Photography and I'm in my intro chapter. Okay? Underneath that is in the gray is going to be the file, edits, view, list, right? All of those details. That's going to be called the menu bar. And the menu bar pretty much lists every single transaction that exists in QuickBooks. Okay? So in this case, it allows you to have every single transaction that you may not see on the home page, that you don't have on your icon bar. It's going to be every single transaction. And of course, it's going to be broken down by arrows. So when you pop up one list, it's going to break down to another list. Okay? So it's very typical of Windows, right? Windows does the same thing. Or Microsoft, right? You go to File, you have your options. You can save, you can print the file. Same thing here. It's a menu bar. Okay, it gives you a list of all the transactions that you can do in QuickBooks. Okay, so now we're going to talk about centers. So this is what I was talking about when I said centers. So centers are going to be kind of like a group of where majority transactions exist. So in this case, I said that there are 3 main centers, and that's going to be your vendor center, your customer center, and your employee center. So again, your centers are going to revolve around the people that exist in your company. So the people that exist in your company are going to be the people that you make contracts with, or people that you buy things from, suppliers. The other people are going to be your customers, people that buy stuff from you, and of course the people who work for you. Okay, those are the main 3. Okay, they're not the only 3 centers that exist, but they are the main 3 that is pretty universal throughout every single transaction that you do. Okay, and of course, every single center is going to break down in details. So, example I'll have right here on the page is an example of what a vendor center looks like, and we'll talk about this when we dive into chapter 4. When we actually take a look at how we enter people into the vendor center. So again, it gives you a little synopsis or a little overview about the customer. It gives you at the bottom here, gives you all of the list of transactions that occur with you and this vendor. And then on the left side in the list here is a list of all of your vendors. Okay? And their respective account balances. Okay? So how we actually enter in a transaction. There are, I would say there's 3 main ways you enter in a transaction. You can enter it in like a form. So if you ever gone to the doctor's office, pretty straightforward. You just fill in the boxes, right? You fill in your name, you fill in your age, your birthday, whatever it is that you need, allergies, things like that. Same thing for here, except it makes it so much easier because we get the ability to get a drop-down list to make filling in information much, much easier and much quicker. So exactly how you fill out a form, right? Top of the line here says it's a purchase order. Who are you purchasing from? Boom. What class do they belong to? Okay, so we'll talk about classes in chapter 2. What items are you purchasing from this vendor? How much quantity are you making this purchase from this vendor? And of course, you're going to enter in how much it cost you, yada, yada, yada. And you're going to also enter in the date, and you're also going to enter in whatever reference number you want to place in there. Now we'll talk about the address in a second. Not in a second, sorry. When we dive into chapter 4 and 2. So when we actually deal with our vendors and our customers. So filling out this data, you don't have to do it yourself. Okay, and we're going to see how awesome QuickBooks does in order to save you even more time by filling it in for you automatically. Okay, so that's how you enter in one type of transaction. You can enter it through a form. Okay. Now the other one is entering it through a list. So just like this right here is an example of a vendor list, right? I can enter it in like a list. I can enter in multiple people all at once. As you can see, it's like an Excel spreadsheet. You're filling in data simultaneously. So I can fill in last name, first name. Are they a Mr.? Are they a Mrs.? What is their company name? I can fill all that stuff in just like a list. And what's even more great about this is if you are an expert or if you are familiar how QuickBooks works is you can actually import things from an Excel spreadsheet. You can even copy and paste things from an Excel spreadsheet. So that's really cool. But of course, I'm not going to show you how to do that because that's more for advanced level of understanding how to enter in lists. So again, they teach you inside the book. So again, it's just more advanced level of entering in transaction, right? You can utilize Excel. Okay, so it's Microsoft friendly, right? So, and then lastly is going to be registers. So we're going to talk about what a register is. So it's not like a cash register. You're not entering it like that. But how we enter in a transaction using the register is we're actually recording what the transaction happened is. And what's going to do is it's going to automatically update the account balance right then and there as soon as you entered it into the register. So we'll take a look at this, especially in chapter 4, okay? And you'll see what the difference is besides entering it in through a form or entering it through a register. And we'll talk about what registers are as well because there's certain account types have registers while others do not. So I guess this is something that you will learn as well is that your temporary accounts will not have registers. Now, what are temporary accounts? Temporary accounts are accounts that close out at the end of a given period. So there are two accounts types that close out at the end of the period. It's your income account and your expense account. Okay? Reason why we close them out is because they kind of reflect a perfect projection of how we can predict profitability, right? Because every income that you occur with, let's say your accounting period is every month, by closing them out, you can assume that every month your income is not going to be the same. It's not a fixed income. It's always going to be different, especially maybe one day you have a great sale and then the next day you barely have any sales. Okay? Same thing for your expenses. Your expenses are not going to reflect the same every month. Yes, you'll have some fixed expenses. However, you may run into a scenario where you may have to pay for something for this month. Maybe advertising is only meant for this month. Maybe because there's too many holidays in this one month that you double whammied on your advertising expense. So those accounts typically close out because they perfectly measure profitability. They measure in a way where you can make sense of, okay, so for this month I made this much money. This month I've had to pay all these bills. So that's why they're called temporary accounts and they close out and they do not have registers. They have what's called quick reports. Okay? Whereas your permanent accounts, which are your assets, liabilities, and equity, they never close out because example here is if you close out your bank account, which is an asset account, right? What does that tell me?
When you close it out,
Yes.
that you don't have anything else coming in or out.
Exactly. That means you're done doing business. You're essentially closed for business. So that's exactly one of the reasons why you can never close that out, because you're always constantly having cash flow in and cash flowing out. So you can never close that at the end of a given period. Same thing with a liability. If you owe money, just because you tell them I can't pay you, they're still going to make you pay. So understand it kind of like that. So that's why they're called registers. They have account balances, and you're always going to know what kind of balance they have at any given time. And yes. Okay. So last thing I'm going to cover is going to be QuickBooks Help. So again, QuickBooks Help is pretty straightforward. This is where you're going to find, in case you run into a situation where you don't know what to do, or maybe you need to upgrade your program. So again, if you need help, you can always have the Ask the Accountant option. But of course, that's a paid subscription. It's not free. So make sure that you're aware of that. But for most companies that you do go into, most likely they'll have in an account. They'll pay for that subscription to Ask the Accountant, or they'll have the company will have an actual accountant while you're the person that enters in the sales, whatever it is, right? They'll actually have somebody there. All right, so that's what QuickBooks Help does, is it allows you to access QuickBooks Help, especially if the program crashes. So not only do you have the Ask Accountant for any situation where you don't know what to do in QuickBooks, you also have technical help, all right? And that's where it's going to be QuickBooks Help, like actual QuickBooks Help. It's where if your QuickBooks is acting up, something's not going right, your program keeps crashing every time you open it, that's where you're going to access it. And because you're accessing it through your own QuickBooks profile, it's automatically going to link them with the product information and so on and so forth. So this one essentially kind of, because we're accessing QuickBooks Help through the actual program, because if you don't, you access it through just going to intuit.com, they're going to ask you, what's your product number, what's your license number, et cetera, what's your account number. So in this case, if you access it through here, it's going to send them all that information. So they're going to immediately assist you right then and there. Okay. Other things you can utilize the QuickBooks Help is in case you are looking for in regards to upgrade your program to the latest and greatest edition. Okay, so it will give you lists of information on the different programs or editions, but it will also allow you to even upgrade it right then and there. So instead of going through intuit.com and downloading a new program, you can just upgrade this one to that one, right? By utilizing the QuickBooks Help. You can even also update if there's any bugs, or if you want to update your QuickBooks to the latest release. You can also do that here as well. So there's a lot of things that you can do too with the QuickBooks Help, and it's pretty much geared towards whatever you need to actually think about here. Okay, whatever you need help with. So, okay. So that's that for you. All right. And that's the end of chapter 1. So as I said before, there are review questions at the end of each chapter. So let's go ahead and go through them. So question number 1, the fundamental accounting equation that governs all accounting is C, assets equals liabilities plus equity. Yes, that's correct. Number 2, okay, which of the following statements is true?
C.
C, debits minus credits equals 0. Yes, let's look at each statement though. Debits are bad because they reduce income. No, you can never refer debits as bad. Debits can be good, right? Debits can increase your income, right? I mean, well, in this case, it decreases it, but debits can increase your cash. That's a good sign, right?
Mm-hmm.
All right. B, equity is increased by a net loss. Obviously not, okay? Because again, if you lost money, that means you're going to decrease the value of your company. All
It goes
right.
right against your bottom line.
Exactly. And then D, assets are increased with a credits entry. No, as we looked at the accounting model, assets are usually increased by a debit. Okay, so yes, C is true. Number 3, okay, under the accrual accounting, dot, dot, dot,
B.
B, okay, so income and expenses are recognized when a transaction occurs, and that is correct, right? Regardless whether cash has been received or spent, right? So in this case, A says a sale is not recognized until the customer pays. That's cash basis. All expenses are not recorded until you write a check. That's cash basis. And then lastly, you must maintain 2 separate accounting systems. That's kind of irrelevant, so that has nothing to do with the accrual and cash basis. So B is true. Okay. Number 4, QuickBooks is dot dot dot.
All the above. D.
Yes, it is all of the above. So in chapter 9 is where we'll see job costing more prevalent. So chapter 9 is a job costing system. So we'll understand what that means in chapter 9. Sorry, I keep repeating myself. B, a payroll system. That's chapter 10 and 11. And then lastly, a double entry system. Yes, it really is a double entry system, right? But when we enter it into QuickBooks, okay, so when the user enters a transaction in QuickBooks, it's a single entry. So in this case, we're talking about what QuickBooks does for us. QuickBooks is an entry, a double entry, because they use the debits equals the credits, and they work it behind the scenes. So D, all of the above is true. Last but not least, number 5, which is not a method of accounting, the data entry screens. So this is like, what is this? Excuse me. The question is asking, what is not a way to enter in data?
Okay, we were talking about the menu bar, the home page, and the icon bar. So I would imagine it's the data entry button because you're not accessing data, you're actually putting data in with that one.
Absolutely true. Plus, I didn't even talk about a data entry button at all.
That wouldn't have mattered to me.
Yes, exactly. Exactly. Good. So as you said, we talked about the home page. It's a graphic depiction, right, of the transactions that you can enter in. We also talked about the menu bar, right? The list of every single transaction that exists in QuickBooks. And of course, the icon bar allows you to have quick access to enter in a transaction. So yes, all of them are true except for data entry button. There is no such thing. All right. Lots of information, but I heard